The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And hope you're geared up, tooled up to have a good weekend, 3-day weekend. Don't forget that. People like me forget when the holidays are. Hope you're not one of those folks. Monday's going to be Memorial Day, where we're going to have to, in my opinion, look back at who's taken care of this country over time and thank them. Here we go. Canadian dollar. Having a little bit of a rally up this morning. Again, you know, had a little bit of a breakdown 2 days ago, started coming off these areas where we had rallied up into. This is the devaluation of the Canadian dollar. So we're coming back up. You know, breakdown means former support, now resistance, retracing back up into this area, 130.48. And as we look at this, we're going to take a look at the dollar really quick. Ouch. Where is my future server? Hold on just a second here, guys. Let me get this up. Here we go. It was already up. I double logged in. All right, so let's take a look at the dollar. These are real-time futures quotes. You know, we've talked about the dollar, you know, getting into these areas, this 95.65. And we're going to just kind of do a currency first 7 or 8 minutes here. But the dollar rallying up into this 95.65, almost hit it to the tick. What was that? 95.67, backed off a little bit. But I'm not so sure that this thing is not going to power through those areas. We talked about, you know, the possibility of this, you know, crowding action like we had before. You want to see these prices get away from areas like this. And 95.53, 95.64, 65, like we talked about on the weekly unfair high. Those are, you know, pretty big resistance areas, but I don't think that the dollar really wants to be away from these resistance areas. So that being said, and it not being the easiest trade in the world, we're going to take a look at this as, you know what, I don't know if we should be selling this resistance point right now. We'll probably get back into this fair auction. We never actually hit it. A profile appearing above price action is bearish in general, but you know, this dollar trade concerns me, so I'm not exactly extremely excited about selling the Canadian dollar on this reference point right now. Okay. All righty, here we go. All right, so taking a look at the euro. This is one where we've kind of looked at this POC 111.43 as something we can lean on here on a long term. Here's our scanner. We're going to go into the, and I am flying around this morning, guys. I apologize. We're going to go into the scanner. We're going to take a look at the euro here, and we're going to look at that POC. There's that 111.43.44. Here's a landscape view. That's where we got into that neighborhood and kind of bounced a little bit for a little bit of a trading bounce. But the thing that concerns me on this trade is that, again, we're not getting away from this inflection point on the euro, just kind of similarly like that dollar situation. If the dollar pierces all that, you know, this inverse relationship with the euro is probably going to happen. When you get into these areas, you want to see them get away from these areas, these long-term inflection points on a wide profile, that POC. So my thought here is, you know, we've kind of hit that point. We've bounced up. We've caught an inflection point. We're coming off again. I think the dollar is probably going to head higher. And I think, as crazy as that sounds, with $20 trillion in debt and Trump at the helm, God knows what's going to happen. I can only laugh. But, I mean, you know, it's a little concerning. I get some of the things he's talking about, but it's a little concerning. It's a lot concerning. Not a big fan of trigger happiness. But you know, the euro could continue to settle down here. Settle down meaning go down. So we've hit the Canadian dollar. We haven't talked about the yen in a while. This was kind of wild that, you know, that we actually reached our targets and from that 105.5 and just backed off 110.40. Talked about this not being the, you know, the short of all times here. It was just a target-rich environment for longs, and you know, this thing kind of rattling around here below, just like the dollar. You know, the yen's, in my opinion, you're not really looking at this as a shorting opportunity. You're looking at it as a, let's get a weekly close above 110.40, and then let's get on the long trail again. All right. So we're going to take a look at the Aussie really quick. We're just going to hit the currencies this morning, of course. So I had Dave on the show yesterday. A little bit of an area that you could lean against, that 71.69. Why is that an important area? We talked about this yesterday. There it is, that big number that we had to cross the border before to really get super validity on this divergence in Navigator and lower prices, lower lows on the price action itself on the Canadian dollar back in January this past year. These currency long-term trades, you know, sometimes you can kind of be swinging the sword in the battle on a day-to-day basis and really not be able to step back and look at what the, you know, the situation really is and which side of the market to block off. You got an opportunity here, a little trading opportunity. You have a chance to play defense. This is all in the scanner, by the way. If I go into the scanner and I go into the Aussie dollar, then I'm going to get the same picture. And there's that weekly big number, 71.69. And, you know, we always look at every trade by, you know, how do we play defense first? This is the defense trade. So where's your targets? Where's your risk reward on this trade? I'm going to look towards the dailies. And I'm going to say 73.42. Okay, that's it. That's the best case scenario right now. That's a decent risk reward. And if you look at the long term on the Australian dollar, that breakdown below 74.81, again, you know, this is kind of a long-term trend changing situation. And we're just looking for a contra trade up into those daily for lows. All right, here we go. All right, so we've hit the currencies. That's good. We got that out of the way. Let's go back to the futures screen. And let's look at my my pal here, the S&Ps. Going into Memorial Day weekend, we're going to talk about this a little bit, putting a couple things together for the S&Ps when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were wrapping up the Forex section there and get into the S&Ps, the bane of my existence. Let me read the in here, okay. On yes, yeah. Yeah, Russ, I hear you. It's Russ from the Den was saying this thing had a weekly close above profiles in literally God knows when. So, you know, this is a June contract. The continuous contract, very similar situation. Let me just pull that up really quick. There's the drill there. And as we look at this, you know, I mean, you can say, okay, well, wow, man, you know, maybe it's Memorial Day weekend. This is for day traders, of course. It's Memorial Day weekend. Anybody within any sense might not want to go into a 3-day holiday after they've just banked, what, 70 S&Ps in a week. But no, that might not happen. So you might have some people actually covering saying, oh my God, what's going to happen Tuesday? Is the market going to gap up another? I mean, this, yeah, you're playing around with fire actually shorting this now. You've got a little bit of a lid here. You've got a little bit of chance to retrace 2083. That's the weekly unfair high. That's the 240 unfair low. You know, that could be an order here. I mean, it could really be an order, actually. So, you know, if it's a couple of scenarios here. Day traders, that will be kind of your target. Unfortunately, the lofty 8-point move. And you're going to have some issues around there. If we fall through there and get a close this week below 2083, not going to be the best thing in the world for longs. But you got, you know, Friday is today. And what do you got? 7.5 hours? 8 hours? Left. I've been watching David White, sorry. So as we look at the 240, man, I love his show. Just, God, One of my favorite shows. Where's my chart? Everybody see? No chart. Let me reload that, guys. Let me reload my chart here. Sorry about that. Let's repost. And we'll be back up in 2 seconds here. How are we doing now? If anything happens like that, it's always TFNN's fault. It's never John Logan's fault. We've signed a contract that says that. Chart has a blue overcast. Well, okay, cool. All right, so day traders, you've got 2092.50 to lean against on the 240s. You've got some 2083s down below, which is the weekly unfair high, and then you've got 2073 daily unfair high. But this collection area 73 to 83, this is going to be almost not impossible, but it's going to be tough to get this price back down through this whole mess today. And if it does happen, then you've got to, I think you've got the longs kind of scratching their heads a little bit. The one thing that you got to keep in mind, just talking about these inflection points on the index chart itself, is you've got to pay attention to this breadth situation. This is now completely in concert, and if you get pullbacks to those inflection points and these things are positive, you just got to buy it. I mean, I tried to pick a couple of battles around 73 and 83 just for trading opportunities. Man, it didn't even. It's got skint a little bit on those, but that was, again, those were little trading situations, and it just proves the point when you get to these inflection points and you kind of spin around, those are not the type of trades you want to see for kind of reversals. I mean, you want to see them get to these inflection points and pull away, and then you can kind of clear your head and think a little bit. When it's spinning around there, it's almost like, oh God, it's on the launching pad again. So this is kind of day trading lingo. The long-term situation, the internals have rolled over into a very north situation on the long-term time frames, the weekly and the daily. And I really don't see, there's no big yellow peelbacks happening in a large way on any of the internals. In fact, I'll go into this new box on the weekly. There's 10, 20 stocks maybe. Let me see here, 20, 14. Wow. Okay. So there's 14 stocks trying to create new profiles above. Is that 14? Oh, yeah. We got green and red here. Sorry, guys. So 14 above and 5 below. So there's really no disturbance in the kind of collective trend here. What I'm going to do is I'm going to go to the daily. I'm just going to look at this. And this is kind of cool because you can see some of these stocks that are kind of giving out of gas, possibly, or just reaching intermediate target-rich environments here. So, the Chubbs of the world, the DuPonts. Remember that guy, the DuPont guy that went nuts up there? Had the wrestling facilities for the fine young men. I'm sorry. And then ended up killing one of them. It was crazy. I mean, I don't know if you remember that story. I think it happened in the late 80s. Or was it late 80s? Maybe early 90s. Weird situation. Well, that's our tangent for today. Monsanto. So what's happening with these things is I'm going to drill into. So here, okay, so Monsanto really, can you find a scarier stock to short? Probably not. But here's daily yellow peelback. That means we're having a new profile attempt to appear, still weekly strong as I don't know what. But here's Monsanto. Obviously been very news driven. I know you guys know that. But going to have a new supply area hitting up top here. Here's the weekly. So, again, for guys who are that have been trading this breakout on the weekly, let's go back to the weekly. Above that 93, might want to start taking some weight off now. So, this wasn't anything I pre-planned. I was just trying to show you that there was not a lot of overhanging supply, even on the intermediate, as these S&Ps are not creeping up, launching up. So that's the situation there. My charts are fine, right? Okay, cool. I'll assume that. Yes, great. All right, so here's the indices view on the scanner. The daily situation. Shanghai, just kind of sitting in the doldrums down there. I tell you what, if you can find some ETFs, what we're going to do on this one, we're going to talk about the Shanghai when we come back, but if you can find some ETFs where you can do some strangle long volatility plays, I don't know if you're barking up the wrong tree on this one. We're going to talk about that a little bit when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we were talking about Shanghai when we left. Not as creepily. God dang it, is that a word? Compressing in the low vol like the S&Ps. But as we look at the Shanghai, this is the situation here. This is the daily. This is the weekly. Again, you could go into, this has just gotten into massive low vol. You could go into this particular product, find the ETF that mirrors the action of the Shanghai as much as possible. Go in. You're sitting at the bottom of support here, 27.42. You've already explored this entire fair auction. You know, don't know exactly which way this thing's going to bust out, if it ever does. And again, the Shanghai can have a tendency of just completely going into the abyss of low volatility. I'm going to reference back 2014 and beyond. But again, I think we've got some really good, you know, especially political impacting events coming up. I mean, you know, if Trump, there's got to be a Trump factor to all this now. I'm not saying that's good or bad, but as we look at this, you know, he's wanting to dismantle. Again, you know, who knows if this is good or bad right now. This is going to require some deep analysis from you know, some guys who teach economics, and get them all together and just get a, you know, God, really good view on this. But you know, he starts talking about dismantling the relationship with China. This could destroy the Shanghai, or with a new set of rules, it could make it happen. I mean, you've got a lot of different things going on politically, fundamentally, technically here. Low volatility play, where buying volatility, just like on the S&Ps. I mean, we talked about the volatility play, what, around 20, 40, 50 in that general area, just buying the strangle. We didn't know which way it was going to go. I was a little bit more bearish than bullish. But, you know, what's happened now? We're at 2090. We talked about how to deal with that particular trade when it goes in your favor. It'll be a very similar situation here. I don't think you need to complicate this trade. You know, you could put on, okay, we're at the bottom of a profile on the weekly. Let's put on a simple put credit spread on the bottom. Let's see what happens. Limited risk, limited upside. But again, I think you've got a really good chance at this stage. That's not the mousetrap to use. I think you've just got to buy volatility. You can do some, you know, you can get a little bit more over leveraged on the long side right now if you'd like, but you know, I just think you don't have these types of things happen too often where you can. These are one of those things where you might be able to make your whole year on a nice lottery ticket, a cheap lottery ticket. Okay, John from Philadelphia didn't see that. I will. I'm consciously aware of trying to slow the charts down now. That's what the triple macchiato, whatever, that I make here does. 10-year. I mean, I'm completely shocked how this thing has acted. I think Tom probably is too. You know, we've talked about, you know, what's the easier trade. This is the 10-year, by the way. This is the weekly. This is where the defense can be played below 129. I'm just completely in admiration, I guess is the word for it, that this thing can continue to not go down. Just stunning performance. The Academy Award goes to the 10-year right now. But we talked about how, you know, what's the easier trade to try to mess around with these S&Ps, breath turn positive, or past the inflection points. 10-year, boom, sitting on support, won't go down. Again, you're always looking for the easier trade when it comes to looking at the scanner, drilling down, trying to find the ops. This is the op. So your near-term target's 130. I actually think this thing can go higher. So if anybody has any thoughts on the 10-year and the rates and where they might be headed, I'd love for you to call in to the show today, because I'm just I'm in awe of this thing. I'm going to start crying in a little while. We're going to take a look at gold. This one, I was playing around with this around this 126 area yesterday. I was, you know, really enjoying how we popped into this fair auction, came back down, settled down. I was expecting a launch here on the short term. Didn't happen. You got another 240, a chance to pick a battle, 1217. So that's the good news. You know, this type of situation, keep the stops kind of tight if you're trying to pick battles still on the long side on gold. I've talked about this. Still don't see any harbingers of bad news on the long term. I mean, we've obviously broken a trend line here, but as far as profiles go, just nothing really completely unsettling when it comes to looking at gold, that the trend may be completely in danger. Here's the daily. We've obviously had that intermediate breakdown below 1240, but I'm expecting a retracement at least back up into 1240 and maybe even higher on this. The dollar spinning around at the weekly unfair highs and possibly heading higher is not going to bode well for this, but I don't know if gold is completely attached to the dollar right now. Here's a July contract on silver. The gold contract, the June contract, I think, a clearing firm like Gain or OEC, whatever, John from Philadelphia, correct me if I'm wrong, but isn't the rollover date, holding period, whatever you want to call it, over with in June for the June contract to gold Tuesday, Monday or Tuesday, Wednesday, something like that? So we're going to be rolling pretty quickly. Maybe somebody can look that up really quick. Here's a July contract to silver. Man, weekly close below here, 1644.45. Yeah, roll almost done. Yeah, it's kind of shocking, but it's an indicator in itself why the gold weekly hasn't really budged on that July contract. Here's 1644.45 on silver. We're just kind of meandering below there, weekly close below there. It's not going to be cool for this product, but I like how we've got a little DMZ down here, 1644, 1630. I'm not trying to find external other reasons to look at silver from the long side. I kind of like how we've got a little bit of a base here. It could get a little bit of a pop back up into 1678 off of this DMZ down here. So that's what that would be a trading trading opportunity on silver. And if gold can kind of get back into that 1240 area, may drag silver up a little bit here. So again, you got something to lean on down here to play defense on silver. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Excuse me. Welcome back to the show. We were just finishing up with silver there. So what we want to do now, we talked about the 10-year. Man, as soon as I keep talking about it enough, it'll implode like an atom bomb killed it. Well, my e-signal is frozen. Oh, here we go. Okay. Yeah, so again, we just want to revisit this. 129's defense on this. This is going to be, Custer's last stance on the 10-year. So, but, again, I mean, God knows if the U.S. stock market's going to ever come off again. But if we do, I think we could get a nice additional rally in the 10-year off this little bounce. But if we don't, it seems like the 10-year will just at worst go sideways. So, that's the kind of things you really want to look for. That's that relative strength, relative weakness kind of concept. And that's what the scanner is really all about for me. Putting on my sales hat again. Actually, it solves a ton of problems when it comes, I used to, you come in and you're like, oh, God, what do I trade today? Facebook, Netflix, blah, blah, blah. Why not trade something like Hanes underwear? Like if it's showing itself and it's there and it's raising its hand. I mean, we looked at some stock. I'm not saying trade Hanes underwear right now, or Hanes and Company, whatever it's called. But you can go into the scanner and you can just hit some of these custom sorts, breakdowns. Boom, here we go. Hanes was on here. It might have already followed through. In fact, let me go back while we're talking about underwear. Hanes brands. That's what it's called. Sorry about that. All right, so let's take a look at it. Here's, in fact, this is when we were said, okay, well, this thing's not one to cooperate. It's an XLY stock. You want to look at the XLY. You want to look at this, but this thing just kind of got back into an area where you could just kind of hit it again. 29.74 coupled with wait a minute, was that 29.70? 27.31 coupled with 27.40. So again, may not be a ton of juice in this trade, but you can play defense on it. If you get a move back down to 26.70 and maybe a little bit lower, what are you looking at? 4 or 5% move. I don't know if you can complain about things like that. I mean, that's nothing to write home. That's not a great, super risk reward on that one. But what I'm trying to say is, on the breakdown section, and there's a lot of different custom sorts we did, and you can see how they're kind of, programmatically done. Let's see, Royal Caribbean. Okay. Here's the weekly. All right, so you got a target down below of 68 on this one. And now you can play defense around 75.97. CenturyLink, Insco, Carnival. Both of these are also XLY stocks. So Royal Caribbean, Carnival Cruise. Let's see. Ouchie mama. Okay, yeah. Not participating lately. But again, you know, you've got a chance to come up here and, you know, I made some custom. You know, what I do is I take some stocks that are showing themselves, then throw them in a custom portfolio, save them, and then just kind of go back and reference and see how they're doing. Downtrend reversals. These are, let's see, strong uptrend reversals. Let's look at this one. Not a lot of stocks breaking down right now, by the way. That's another indicator. You look at some of the things that we, you know, have kind of custom baked in there. I hope you kind of put that in perspective. There was 4 stocks that were, you know, by definition breaking down right now. That's pretty. That's, what is that? 5, 1, blah, blah, blah. Less than 1%. Uptrend reversals. These are stocks that have kind of been in an uptrend. ESV, this is one on the breakdown section too. So let's take a look at this one. All right, here we go. We're breaking down. This wasn't really in an uptrend, but the way we gauge this is if it breaks above a profile recently, we call that a break in downtrend. So that's why that was on the list. But let's go in here and let's look at stocks that are in a downtrend by definition. This is not even a strong downtrend. This is a strong downtrend. There's 1, 2, 3, 4, 5, 6. There's 6 stocks that are in a strong downtrend out of 500 on the S&Ps. And you can add, you know, Australian ASX 200, Philippines, you know, Brazil, blah, 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 all in the same sort. So if I come in here to the ASX 200, I'm going to get the ASX 200 strong downtrend stocks. If you're trading on a platform that supports a lot of these instruments, you can go in there and just, wow. But, you know, again, we're going to do some manual sorts after this break. I'm going to show you some other cool things you can do with this thing. But if we go to downtrend, these are the ones that are bare minimum downtrend relative to the profiles, not to mention possibly strong downtrend. So Coles, you know, you've had this little ugly scene for a while. Nothing different. I mean, not wanting to, God, this is sad. This is sad. Yeah, there's no reason to try to buy this on sale. 0 reasons. Don't, you know, if you're just coming into this game and you're joining the den and you're trying to learn as much as possible, things are down for a reason when the market's going up. It's not like you found some gem that nobody else saw and you're going to be able to pick up and there's a free lunch waiting. It doesn't work that way. You'll find that out if you play that game. Caterpillar. Now, I like this. Not yet showing bottom there, but Caterpillar, you know, broke down, go back and retrace. We actually talked about this the other day, I think on Wednesday. 72.87 has retraced back up into that. Pre-market, no prints yet. But, you know, you broke down and you kind of got a gift. You've gotten back up into these unfair lows. We could have a little bit of an opportunity here. And where's your targets? And again, these are trading opportunities. Come on, chart. Here we go. I think you've got a lot lower than 71 on this one. Okay. A couple other ones here. H&R Block. This is the slow death of all times. I mean, their whole business model has been compromised by the online stuff. If you can get a rally back up into 2306, it's going to be the gift from heaven. Don't know if that's going to happen. This is not good. You can play defense a lot lower on this if you want to just bang this again. L Brands, again, another XLY stock. This is the daily. This is the weekly. Let's see, no turnarounds here. Nah, no turnarounds. So you can hope that 6805's hit on this for a trading opportunity. We're going to go back into the ETF section when we come back, folks, and we're going to look at this XLY situation right here. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're going to take a look at the XLY really quick. This is one, this consumer discretionary is the XLY. I went to the ETF heat grid. Let me just go back and do this. Boom. Booyah. Here we go. Discretionary, not the worst breath in the world, but you got some dogs in here. You got some things showing their self. And the reason I'm saying and looking for talking about dogs is market moving this violently one way really clears the air. You can find out what's not in vogue. Is Kramer saying booyah now? I didn't know that. I thought that was a 1990s Saturday Night Live thing. I guess he picked it up too. Kramer's copying me. I'm honored. Anyway, McDonald's core. Okay, so this is one, not, a little bit of a mixed bag, uptrend weekly, that arrow up, downtrend daily. So here's the daily. Again, you could look at this as like, hey, we're in a big uptrend and looking for support. So here's the weekly. Let me just show you this. All right. So 119.67, bottom of the profile on the weekly. As you see, a lot of times you explore these entire fair auctions. But what I want to show you is, okay, wow, hey, Logan, we're on support. We're in an uptrend in the weekly. Dailies, so we've broken trend here. But the thing that's kind of interesting is, at bare minimum interesting, is the S&Ps have flown. And what has this thing done? Gotten sicker. All right. So to me, this doesn't mean, hey, classical technical analysis, we're looking at the daily, looking at the profiles, bottom of the envelope, might bounce. All things considered, this is not a situation to buy this. All right. This would be possibly a situation to try to pick it up at 119.67. And if you get a little bit of a break here below 123, basically is what it is, you might have a 3 or 4 point move here in McDonald's on the downside. And again, these are short-term trades relative to the long-term trend that's happening in this stock. Here's some other things that are, man, there's some crap in here. Starbucks. Every time I go into Starbucks, I just, you can get, we talked about the other day, you can get some insane coffee. They haven't seemingly lowered their prices. Coffee's just gotten killed. And you can go buy some great coffee for less than $5 a pound. I mean, if you search around, look, so every time I go in there, and I don't go in there anymore, but it's actually a function, too, of, some other things going on in the economy. But Starbucks, fundamentally speaking, I think we're still going to head down here. 56.11, unfair highs on the daily. If you ever get back up there, I think you got to whack this thing again. Here's the weekly. And 57.57 up there, too. So if you get any types of rallies in this thing, I think you could just hit it hard, put the stops in, walk away. This may be something that could come down 10 points. VF Corp, another one, hasn't really participated that well lately, coming up into a flex point 62.30, top of the profile on the daily. A couple announcements. Larry is not doing his show next. Basil's going to fill in for him. You're in for a treat if you've never seen Basil's show, because he knows what he's talking about, folks. Stay tuned. Have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.